All right, now we're going to be introducing the acquisition method within our business combinations. So on January 1st of the current year, Universal Inc. acquired 70% of Gray Corporation for $280,000. So always remember here that when we're talking about the acquisition method, this is generally going to mean that we're acquiring between 50 and 100% of a subsidiary. So the fair value of Gray at the time of the sale was $400,000. Gray's net identifiable assets had a fair market value and a book value of $350,000 and $310,000 respectively. What amount should Universal Inc. apply to goodwill for this transaction? So when attacking an acquisition method type question, what I suggest is always going through the journal entries. And when doing this, I would always start with our credit journal entries. So this is always going to start with our investment in the subsidiary, which is going to be the $280,000, and the rest is going to be applied to our non-controlling interest. So this is going to be the portion of the investment that we are not going to own. So if you could see here, we're acquiring 70%. That means that we are going to be applying our non-controlling interest to 30%. So 70% less our 70%, that is going to give us a 30% non-controlling interest, right? So therefore, our $400,000 sale is going to apply 30% of that to our non-controlling interest. That's going to be $140,000. So now going into our debit accounts. So when going through our debit accounts, we're always going to start by booking the net book value of the assets that we're acquiring. So we're acquiring $310,000 of net book value assets, and the difference between that and our fair value is going to be booked to our fair value adjustments. Very important that we remember that. Always the sum of the net book value of the assets and the fair value adjustments is going to equal our fair value of those net identifiable assets. So now we can calculate our goodwill, because the next thing we would see is any sort of identifiable intangible assets. But I don't see any of these, so therefore that's going to be zero. There's nothing there. So that's always going to be the second step after the fair value adjustment, but after that, the remainder is going to be applied to goodwill. So that is generally always going to be the fair value of the equity in the company that we're purchasing. So the fair value of that company is going to be $400,000, and that is going to be less the fair value of the net identifiable assets. So again, that is always going to be our plug, and that is going to be our $50,000 that we're going to get for our goodwill.